All right. Hello, everybody, and welcome to this week's edition of Selfwealth Live, the technical analysis edition. We're here for a great week of the show. Jace, how are you today?
Hey, Rog, I'm all good, thank you. It's good to be back on for another show. I think there's some interesting price action going on to talk about today. All-time highs in the US, but not locally. But there is kind of locally. I'll tell you what I mean about that as we get into the ASX section. So all good. Looking forward to it.
Good to hear. Yeah, I looked at the Nasdaq, and it seems like that's gone to all-time highs, but a bit of mixed bag with these indices. Nothing's tracking perfectly, but overall it's positive. But it's going to be interesting to talk about. Okay, before we get on to the show, if you're a newbie, obviously welcome. If you're an oldie, welcome again. We appreciate you coming every week. What we do is we go through the three main indices we offer at Selfwealth, and that is the AU market, the US markets, and the Hong Kong Chinese markets. They're the indices. We'll go through their what it looks like from a charting perspective, and the price action. If you've got any trending questions, pop them in there. And this week we're going to change it up a little bit. We're obviously just conscious of look. It's been great serving this community for the last 2 years. Last week was our 2-year anniversary show, right? And it's been great serving the community. But we're sort of conscious of the fact that we started off with about a 45-minute show, and then we kept on creeping up. And at our all-time high peak, we got to about 1:36 in 1 hour and 36 for the show. So we're gonna try and peg it back a little bit, pull it back. Now, obviously we want to be able to provide as much time as possible, but I'm sure we're all busy people, right? So we are going to try and peg it back to that hour format, hour show. So how we're going to do that this week? So those that have been here, for a longer period of time, we don't want to disappoint, but at the same time, I'm sure you understand that we've all got other things to do as usual, right? So what we're going to do is we're going to analyze one ticker from everyone. So please feel free to pop in a couple of tickers if you want, but we're going to go through one ticker each. If we've gone through everyone's tickers, try and keep it fair. If we've gone through everyone's tickers as best as we can, and we've got that time at the end of the show, and I feel like there's that time, I've got to gauge it, obviously, then I might circle back and come to the top, right? So I hope that's okay with everyone. I think we just, as you know, it's as with everything, we've got to try and be fair and at the same time respect everyone's time as well. So hoping for a great show. But now I've set out the rules. Obviously, I'll draw a line in the sand where we can't accept anymore if we're getting too much. But we obviously love. That's the favorite part of our show, is being able to look at your tickers, right, and seeing what our thoughts are around those tickers. So all right, Jace, let's get on to that disclaimer. Let's have a look at it.
Okay, so everything today, general commentary only, doesn't take anyone's personal situation into account. And let me just put on our disclaimer. And this just goes through that general commentary. One sec, Rog. Yeah, general, just got a warning that my battery was running low. It hadn't been plugged in. Hopefully we've averted a shutdown now. But now getting back to the disclaimer, general commentary, no personal advice. I'm not part of Selfwealth. I'm Motion Trader. You'll see my details at the top, and beneath there you'll see all the Selfwealth information as well. So all general commentary.
Thank you. Well, I thought you just kept it unplugged just so we could unplug quicker, just by you not having any power left, Jace. But as I said, guys, feel free to put a couple of tickers in, and that way, if we've got time, we will always circle back as well, right? So, okay, let's get moving with the show. And how is that Aussie market going today?
Okay, so let's start off with our chart of the ASX 200, and there hasn't been a whole lot of movement in the index this week. Prices have traded within a tight range, just above the September low, and this also coincides with the 50-day moving average, and of course below there we have the 100-day moving average. I think the price action we're seeing here, I think, is positive, and I think there's signs that the dip is being bought. The fact that prices are consolidating around the 50-day moving average, I think, is one of those classic bullish signs, because we know that bull markets are built around a a series of rallies that like they take prices higher, and then that's often followed by consolidations and pullbacks towards the moving averages. And you can see that playing out, many times through bullish cycles. And you just compress this a bit and go back to the previous bullish cycle, you see the rallies and back to the moving averages, and then trading around the averages, and the sequence continues. And that's typical of bull markets. I think that's what I think the odds favour that's what we're seeing here. Until we get clear signs to the contrary, I think the base case should be that this remains a bullish market. As I said last week, I thought a multi-week consolidation was a possibility, and I think there's certainly scope for more consolidation in the near term. That said, the rally could also just as easily re-engage in the near term. Like, we just never know the timing of pullbacks and how long consolidations take. We never know until we look back. For me, it's a case of being mentally prepared for like a longer pause. So should this chop sideways for several weeks, I'm ready for that. That's certainly a possibility. But I'm also positioned for further upside if that comes sooner or later. And I think being positioned for the upside is the key, rather than trying to time it for perfection. I'll show you another reason why I think the latest pullback is just a pause in the trend. Let's have a look at the ASX 200 on equal weighted basing. This is really interesting. So this is the ASX 200 equal weight, and it's breaking to a new all-time high today. So just go back to the ASX 200 for a sec. It's come to below the all-time high, consolidating, yet the equal weight, the same group of stocks, but just ranking them equally, so the biggest stocks don't have the most influence, and it's breaking to a new all-time high. And then look at its performance over the previous couple of weeks. It had a shallow pullback from the previous high, and as we often discuss, shallow pullbacks are often a sign of buying interest. And I think that also, another thing to note is that the equal weight hasn't pulled back to its 50-day moving average as yet. So these are all signs of relative strength compared to the ASX 200 index, and it suggests to me that the broader market remains strong. As we often discuss, a strong broader market is a key factor in sustainable bull markets. So I think the time for most concerns is when you've got a narrow group of big caps doing all the work. That's not what we have here. That's not what the equal weight is telling us. It's telling us there's that broad participation. Just on the ASX 200, we can never be sure whether further gains will come in the near term, like re-engaging quickly, or whether it's going to take time, whether there's going to be chop, or whether there's going to be new highs at all. Maybe this market does peak out. You can never be sure, but trying to pinpoint the timing is not such a big deal for me. At this point, it's more about being positioned for a bullish trend. And from that perspective, I'm long the ASX 200 index. I'm long many of the individual stocks through the motion trader signals that I follow. And again, I'm managing risk with wide trailing stops because, as I said, we never know. You never know for sure. So while all the markers are bullish for now, that will change at some point. So having that, I think always having some thought to the exit plan, having that in mind is always a good way to go forward.
Yeah, I think that's a great comparison, showing the ASX 200 versus the equal weight, and showing that the smaller companies in those top 200 are actually doing a lot of the work as well, right? And I've noticed that in my portfolio, there seems to be a lot of the mining style stocks that are really booming at the moment. Jace, why do you think that is?
Look, we're seeing a lot of the mining stocks, the mid caps and the smaller ones, really doing some interesting things. A lot of stocks you never would have heard of before. They turn up in the motion trader signals, and looking at how some of those have performed over the last few months, it's really impressive moves. And it's not just mining; it's also on the industrial side as well. When we look at the small ordinaries, the emerging companies, which these are stocks which most people have never heard of. But it's like if you can scan the market and you can look outside the ASX 200, there's a whole lot of interesting things going on. So this is where having that ability to scan the market really comes in, and then being able to identify those trends and take advantage of them. It's there's more to the market than CBA and BHP. It's and of course they're the big drivers of the ASX 200 as well as the other top 10 or so stocks. But yeah, a lot going on outside there at the moment.
Yeah, it certainly helps when you can get a scan of the full market to see all the opportunities out there rather than having that limited view, right? So, and then once again, your Motion Trader service does a great job of that. Okay, what's happening over there in the US?
Okay, off to the S&P 500, and strong upward momentum has returned to the US market over the last week or so, and new all-time highs on Monday in the US. In the S&P 500, the Dow made a new high last week. The Nasdaq's made a new high, and this new high in the S&P 500 from Monday, it's the 24th all-time high for the year. The break to new highs, which we've had, it follows about 3 weeks of consolidation. You can just see that through here. We had about 3 weeks where the market just pretty much tracked sideways. We can actually see this better if we look at a chart of the Dow. I just jump to the Dow for the moment. This is the Dow, and you can really see the consolidation playing out in this. So what we had with the Dow is prices had a strong break higher in August, in late August. You can see it had a consolidation along the moving average, broke higher late August. There was then a shallow sideways consolidation for about two and a half weeks, and then a break to new highs again on Thursday last week. So we spoke about the Dow last week, and I discussed that like the stepping pattern in the price action. This is where prices rally, then they consolidate sideways towards the moving average, then they rally again, consolidate sideways, and we can see this sequence continuing this week with the latest step higher. So the consolidation towards the averages, then another step. So you can see the stepping pattern in place. The key features on the chart remain the rising moving averages, so the 50-day and the 100-day moving averages, and of course price is above the moving averages. So that's a classic bullish structure. You'll also notice you've got that clear sequence of rising lows and rising highs. So that's another bullish marker. I saw some interesting research last week, Rog, and it looked at periods where the S&P 500, so just come back to the S&P 500. So it looked at periods where the S&P 500 had a 4-month winning streak and had finished with prices at near a record monthly high. So this has been a 4-month winning streak, and prices finished that 4-month winning streak at the end of August at a monthly high. Now, there's been, since 1980, there's been 21 such periods. So a 4-month winning streak closing out the final month at a record high. There's been 21 of those periods since 1980. And 12 months later, when we look back at those other occasions, 12 months later, 18 of the 21 were higher in a year's time. 2 of the periods were down about 1%, and the third was down 20%. That was 87, the 87 stock crash. But the average 12-month return following a period of strong gains was 14.2%. Now, some important points with this. Each period had sell-offs and consolidations along the way of varying magnitudes. So it wasn't a case of just, okay, we've got the signal, just leverage up. It's one-way traffic. It's never one-way traffic. Risk always needs to be managed. And the past doesn't predict the future, of course. So just because something's worked before doesn't mean it has to work again. But what I think it does show is that exceptional performance like we've had in the last few months is not a good guide to impending trouble, because that's what a lot of people think. A lot of people will say, look, the market's had such a strong run, we should be getting cautious, we should be getting bearish now. People start looking for tops. The price act, the research I've just told you about suggests that that's not a good guide to impending trouble. So yes, things of course can go wrong, as they did in 87, but more often than not, strong performance is not a bearish signal. I think the play continues to be, it's a case of staying long stocks. The overall structure here is bullish. I think the path of least resistance remains up. Managed risk, wide trailing stops, but at this point, this is a bullish market.
Okay, it's actually fantastic for you to be able to explain that and do that research for viewers, because I'm sure, I mean, including me, I wouldn't know that. I wouldn't do it, or I wouldn't even think that way, right? To be able to see that. But I guess once again, it does give us more confidence, right? So versus people who don't hear some of this stuff and hear some of the negativity out there, it can give us that confidence to be able to continue. And I still think, I always question to myself, like, something fundamentally has to really change for us to get into truly bearish territory, like the 87 crash once again, right? So for now, it's great analysis there, Jay. So thanks for that.
And that's not my research, by the way. That's someone else's research, which I found through the week. So I'm always looking at things and reading what other people have to say and looking at other people's research, and it's like you can get good ideas from all sorts of places. But what I found interesting about that is, it's like, if you ask people, would you rather buy a stock at a 12-month high or a 12-month low? I think you'd find that the majority of people would say, I'd rather buy at a 12-month low because I'm getting a bargain. But stocks at 12-month lows tend to make more 12-month lows. Stocks at 12-month highs, while it seems scary to buy something that's at a 12-month high, it tends to make more 12-month highs, because that's the trend. And that's the point of this research. People will see 4 strong months and go, oh, well, it's now time for a change. It doesn't tend to work like that. Strength tends to lead to more strength. That's what the research shows. And but it goes against our mental wiring with looking for bargains and being afraid of buying something which may appear to have already had us run. A lot of good runs continue. Of course, they don't all continue. You use risk management, but riding trends is how money is made.
Yeah, well, obviously, it certainly goes against that wiring, but who doesn't like a great big discount, right? So, but yeah, it's all depends on your strategy and how you want to run things, right? So, okay, let's get on to
the stock market is not the Christmas sales. We go to the Christmas sales, we get a bargain, we get 50% off. You come to the stock market and you get buy 50% off. Buy the index when it's 50% off, you're probably going to do well over time. Buy an individual stock when it's 50% off, you might find that it's 100% off in some point in the future. Individual stocks are different creatures. You've got to manage risk around them, because whilst the market is like a collection of many stocks and is highly unlikely to go to zero, individual stocks are different. That's why we manage risk, and I think we need to be careful looking for just buying something because it seems cheap. It can get a lot cheaper.
Yeah, I tend to agree. Some great points in there. All right, let's have a look at the Hong Kong and China.
Okay, so over to Hang Seng. New highs and more bullish price action. This takes the Hang Seng to its highest level since August 21. Let me just compress this a little bit. There's August 21 over here. So the highest level for just over 4 years. I like how the latest price action has really built itself up along the 50-day moving average. We can really see it trading. So we had a nice run in July, and then that followed like a sideways period. The prices have just moved sideways towards the 50-day moving average, and now we've got the break high from there again. Classic bullish behavior, trading along the moving averages and then breaking out. I think it's a case of being positioned for more upside, and much the same over in the Chinese market. New highs for the recent round of odd momentum during the week, so it takes prices back to where they were in around this time last year when we had like a big spike higher, and so we're back to those levels, and that follows a pause, probably about a 3-week pause in consolidation, and you can see that classic zigzag structure in the price action in that corrective period. What I like most about this latest consolidation is that the market has done a really good job at holding on to its recent gains. So strong rally off the 50-day moving average back in August, and it's held those gains nicely and then rallied again. All too often over the last year, would see prices rally off the moving averages only to come back and fall beneath there. So we didn't have that the market not being able to sustain momentum. Now we're seeing it doing a whole lot better at holding on to gains and then rallying again. So I think this is a market with more upside potential. I'm long this. We've spoken about this in weeks previous. I'm long via ASX listed China ETF. Let's see where this goes. It looks like this could be, to me, it looks like a big basing structure, which is now turning higher after a lengthy bearish phase. Won't be straight line upwards, but I think that's the general direction of this trend.
Fantastic. Let's see if we can break that previous spike high on that China market. Okay, so just to recap, guys, if you're just joining us, I'm going to go. We've got quite a few tickers to get through. I'm going to go one each to start off with, and if we have time before I draw that line in the sand, I can circle back to your second one as well. All right. So, welcome, Betty. Let's have a look at 4DX to start off with there, Jace.
4DX. I think I've been asked this a few times, both here and on my weekly Friday strategy session. And this has really taken off, hasn't it? It's the trend is clearly up, but it's also price action listed back in 2020. So we've only got 5 years of price action. That's plenty for looking at this today. Look, trends up. If I had some, I'd be holding it. I wouldn't be buying it here. It's stretched too far above the moving averages for me to buy it, because where do we then put our stop loss? It's too hard to manage the risk around a new position. But for a position that was bought maybe above the moving averages back in August sometime, or possibly as it was breaking higher in late August, this would be a hold. I'd have my stop. My stop would be way down here, back below back probably around the 100-day moving average. So I risk giving back a whole lot, but that's the way you stay on big trends, particularly volatile ones. You've got to give them lots of room to move around. One strategy which I do consider once something's up maybe 300% or more, I consider, particularly if it's a lower priced stock, which this one has been. It has been like a 20-cent stock. With a lower price stock, I'll consider, with any stock really, if any stock which is up over 300%, I'll sometimes reweight it. Sometimes I'll just keep the whole lot. But if it's a particularly volatile stock, maybe I'd sell a quarter, sell a third, just lock in a little bit of profit, but keep a core position which I run. I think that's the way we make the most money, by running our best positions. Trend here is up. It's going to be an interesting one to see how it goes. It has had these periods of excitement in the past that have ended in an ongoing decline. Let's see whether this one's different. Interesting one, Rog.
Okay, fantastic. Let's have a look at Herbert's. It's EVN.
So Evolution. So I've got some of this myself. I was talking about in my weekly strategy session about a month ago. I just bought this so from below the averages to above, pull back to the averages, and I got a position. I was talking to the strategy session members about that, and now we've had this nice rally off the 50-day moving average. It's also a motion trader stock. I've also held this one for years in another portfolio for a very long time. It was part of a spin-off from another company. how evolution began. But that was like 10 years ago or so. But yeah, from a near-term perspective, this is the trend's up. There's a clear upward trend here. We've got the rising moving averages. It's whether like had some company news out yesterday caused price to pull back, but that's going to happen. You can see there's like, this is probably some company news on this day here, back in April. So things can come out and there can be a reaction on the day, but the broad trend remained in place and prices went up. I think this down day yesterday will just fade into the price action over time. I think higher levels are coming. That's the trend. The trend in this stock is up. There's no sign of an impending top. Of course, that doesn't mean one can't happen. I would have said the same. Probably would have said the same thing in May. There's no sign of a top, but then we got like a large pullback. So always managing risk. But this is a trend I'm happy to be on. In terms of getting on board, how far above the moving averages? Not that far above the moving averages. Gold has had a breakout. Like, it's kind of chasing gold a bit now. We had a good chance to buy into gold a couple of weeks ago when prices started to break higher. So it does feel it is chasing it a bit at the moment. So I'm probably hesitant to just keep chasing. For me now, it's a case, there were some good buying opportunities not long ago. It's now a case of, I think, holding those positions rather than continuing to want to add and buy.
Okay, fantastic. What about CAA, please?
Overall trend is up, but it's a bit of a messy upward trend. Like you can see, it does have it's spending quite a bit. It does spend time coming back below its moving averages, so it's not like a robust trend like we saw during 2020, 2021, where it mostly stayed above the 100-day moving average. This one we have here, it's back and forth across its moving average. So that's, for me, that's a sign that it's not the strongest of trends, but it is trending upwards. Nothing to say it can't accelerate at some point, but it is a bit of a lumbering trend at the moment. If I had some of this, I'd be happy to continue holding it. Wide trailing stop, back below the August low, probably below the July low as well. It'd be a wide stop. Give it lots of room to move about, and that's how you stay on these moves. In terms of buying, it's probably not a stock I'm in a hurry to buy. It's pulled back from its high, so maybe there's consolidation to come. If I wasn't in it, I'd be content just to watch it for now. But if I was holding it, particularly if I got in it at lower levels, I'd be I'd certainly keep it in my portfolio and see how it goes.
Okay, fantastic. Thanks, Russell. Let's have a look at TN's. TENCENT, 700 is the code.
700?
Yep, Hong Kong stock.
Yeah, great uptrend. Really, really powering nicely. There's certainly one I'd want to be holding. I think odds favour it's going to make a new break the February 21 high at some point. Maybe not in the next couple of weeks, but I think that's a broad trend. Big sequence of rising lows. These regular pullbacks towards the moving averages, which consolidate, trend re-engages. There may be getting, it's getting a little bit elevated above those moving averages. Maybe there's another pause coming, but I wouldn't be trying to trade around that or anything. If I had this, I'd be simply holding it. Probably wouldn't be. Technically, it could be bought now. It is in an upward trend, and that's what we talked about earlier. Buying at a 12-month high, it can be an uncomfortable thing to do. But risk can be managed around this. It's like it's 20% or 18% gets a stop back below the 100-day moving average. So for somebody wanting to get on that Hong Kong Chinese sort of trend, which is still largely, it's probably not an emerging trend, but it's not a long established trend either. it could be bought, but of course, being prepared for a consolidation should that develop. That's why we've got the wide initial stop to hopefully be able to see off a consolidation. But certainly a stock I'd be happy running with.
Okay, fantastic. Blue's been watching us for a long time and he loves it, so thank you. He's also a long-time holder of NIC, but wondering if its money should be better elsewhere at the moment.
Yeah, this stock has struggled, and as has the nickel price. Nickel's one of the weakest of the commodities. Let's just quickly have a look at the nickel price to help frame this up. Where have I got nickel? Is when you got too many things you're watching. Where is it? Here it is. Here, nickel. So look, you can see nickel's still in this downtrend. The moving average is still down. It's just sort of like popping above the moving averages at the moment, but it's done that before and hasn't really been able to sustain. Possible nickels, starting to base around here, becoming resistant to lower levels. I've been watching it for a while, waiting for a turnaround. I was watching it during this period here, and earlier in the year, I thought maybe this is basing, starting to get above the moving averages, but the averages never crossed. So, I think there's nickel's time will come, as it did in platinum and palladium, which also had like just looking at platinum like took ages to base, and then it turned. I think nickel can do something similar, but when I don't know the timing of that. Coming back to NIC. Well, I'd be inclined to stick with it if I was holding it at the moment. It's found its way back above the moving average and they've crossed. It's pulled back. It's like it maybe this is like the consolidation of the strong rally off the April low. I think it really does need the nickel price to turn to get the most out of this trade. But it does seem like one that I do wonder whether like it broke below the January 24 low during April, but it couldn't sustain that break and since turned and rallied back above the moving averages. Maybe that's a sign that there is possibly a turnaround in play. I wouldn't buy it at this point, but if I was holding it, I'd give it a little bit longer. I'd probably want to think, okay, where's my exit point? It's not a motion trader stock at this stage. I don't think it triggered a signal on this recent run. I think it needs to hit another high to trigger a signal. But I'd probably be looking at maybe it's maybe 25% from the latest high, and say, look, if it breaks below say 60 cents, it's all too hard. Maybe it's back below the moving averages. Maybe it's going to have more weakness. So maybe I'd have my line in the sand. But I could probably give this a little bit longer. But in terms of buying, I'd continue to watch for now.
Okay, fantastic. Irfan, hello. Let's have a look at TSO, please. Morgans seems to love it.
Yeah, that's a nice turn higher. Let's see where it's come from. Like it's lifting out of this large. It looks like a big basis lifting out of. It's not a motion trader stock. It meets all the criteria, but the volatility filter takes it out because these 3 cent, 2.5, 3 cent stocks, they only need to go run a cent or two, and they're up 50 to 100%. So they're harder to trade. But look, if I was on this one, particularly if I bought into it as it was breaking higher around, say maybe 3.5 cents, I'd definitely be letting it run. It's the moving averages are pointing higher. It's above the averages. Could be a little bit stretched above the averages at the moment. So if I wasn't in it, I'd be waiting for the next consolidation, see what that does, see whether it holds on to most of those gains forms another platform at higher levels, let the moving averages catch up, and that could be another entry point. But yeah, if I was on it, as I say, I'd be riding it. I'd have my stop back down here around the 100-day moving average, and then transitioning to a wider trailing stop if it continues to move higher.
Okay, great. Another rising gold stock. Let's have a look at Russell's SBN.
SBN, was that right?
SB for Barry and M. M for Mary.
Oh, M, right. St. Barbara, yes. So no gold play. Look, this has been a bit of a troubled gold stock. It's starting to get some upside going at the moment. It's like, but it's been one of the worst performing gold stocks. Like you look at what the gold price has done over the last couple of years, and this has really barely been able to sort of like lift itself off the bottom. It's probably not the gold stock I'd be. It's on its highs today. It's like if I was holding some, like it's meeting an entry criteria for me at the moment. So the moving averages are rising. It's above the averages. It's breaking to new 70-day highs. So it does meet a buying criteria. I'm wary of it because it's been an underperformer. I'd rather be in the stronger performing gold stocks. But look, that's not to say maybe that's like underperforming stocks can turn operations around and things can going their way again. So yeah, look, if I had this, particularly if I'd bought it just in the more recent times as it started to turn higher, yeah, sure, I'd keep it, see where it goes. Wide trailing stop back at the 100-day moving average. If I want to buy a breakout, well, it probably could be bought today at current levels. Probably needs a 25% stop to get back below the 50-day moving average. But with that breakaway momentum it's just developed over the last couple of days, yeah, I think there's a trade there. Like I wouldn't want to back this as my only gold play because it has been an unreliable gold play in recent years. But as part of a broader gold strategy, yeah, by all means, it's a stock which is probably worth considering for some exposure.
Okay, fantastic. Hi, Grant. Let's have a look at VUL.
VUL?
V for Vars and UL.
Right, Vulcan. Yeah, it's not quite yet for me. It's the moving averages haven't turned higher as yet. I do wonder, is it basing? And like I can see like one of the old school technical patterns here, which I'll draw in. It's like a bullish wedge. I can get my clicker to work. So there. Yeah. Yeah, so it's got that wedging sort of shape to it. So you can see it's sort of like a downward sloping contracting range. And the theory is that as you get towards the apex, the selling is the weakening of the downward momentum is showing you the selling is those who wanted to sell are running out of stocks to sell, and the buyers are soaking them up. And as the price breaks higher, it sets the new round of momentum to the upside. So look, it's showing signs that maybe it's breaking out of this. Look, that's probably a little bit different. It's similar but different. That pattern I've already got drawn in. Yeah, look, there could be a turn happening here. I'd probably like to see it just get a little bit more upside, and then a consolidation whilst the moving averages continue to turn. There's probably a case there is a case for being a little bit preemptive, buying at current levels, maybe having a stop below those recent lows. That's probably about 23%. More aggressive would be a stop just below the low from last week, and that would be what would that be? That'd be about 18%, so 18 to 25% sort of thing. I think there's upside potential with it. For me, I'd probably wait a little bit, but there's certainly a way into this stock now where we can manage risk, and it's asymmetric. Upside is like if it runs, it could run multiple. It could run a multiple of say 20% of risk. So yeah, a stock worth considering.
Okay, fantastic. Hi, Jen. Let's have a look at uranium, please.
Interesting price action in uranium last night. Well, it's been interesting for the last bit. I talk about this every week in the strategy sessions. And so what we've had, like we had this breakout from a 5-month stable period of stabilization. So I had a big rally from below the averages to above, pull back to the moving averages, consolidate for 5 weeks, build a new platform, then a strong rally out of there. And prices have just been consolidating over the last week. Had a big down day on Friday, and that's been followed by a big up day on Monday, right off the 50-day moving average. I've been thinking maybe there's a bit more sideways consolidation while the moving averages catch up. But it's now come back and met the 50-day again. I think the sensitivity is to the upside. I want to get exposure to uranium. I've got a little bit of exposure. I want to have more, but I just haven't got the right entry point. I think the sensitivity is to the upside. Whether it consolidates in the near term or whether it tries to just keep rallying from here, I don't know which one. I don't have a strong feel for it, but I'm aiming to be positioned for strength. I think that's the play at the moment. It's it looks to me like this downward phase has run its course, and it's now a case of uranium is now trying to turn higher into a new upward trending phase.
Okay, fantastic. The next one along would be Sydney. G'day. Let's have a look at COG.
Nice upward trend continues. It's it's been a nicely behaved upward trend too. Like runs, consolidates towards the averages, runs again, consolidates. None of the consolidations are coming back to the 50-day moving average. So it suggests it's a strong trend. This most recent one did, but then that strong rally off the 100-day moving average. I'd be happy holding this one, and the trend here. Yeah, look, trend here is up. Very happy holding it. It's a motion trader stock. I'd be using the calculated motion trader stop, which will be below the 100-day moving average. Could be down around $1.40 or thereabouts. If you're a motion trader member, you go in, you check where it is, but that's just rough to eye what the trailing stop could be on this one at the moment, giving it lots of room to move around. And that's we talk about that all the time. That's an important part of staying on trends. Like you get these pullbacks, it's you've got to be able to see them off, but then when the trend does turn, they get you out at some point. But at this stage, this is an upward trend. Happy to stay on it. Just wondering. Look, I'm probably not rushing to buy it at current levels, but if somebody particularly likes it, wants to get on it, look, the risk can be managed from current levels. It probably needs at least 18% to 18 to 25% of initial risk to give it room to move around if there's some sort of a pause or in consolidation. But one I'd be happy to stay on.
Okay, fantastic. Let's have a look at Michael's SVL.
Hasn't really been it hasn't really been performing with the silver price, this stock. It does have the makings of an upward trend. So it's gone from below the averages to above, consolidated. The averages have crossed. It's rallied again. It is making its way higher. It's rallying off the moving averages. So that's all positive there. I've got this drawn in from a previous time. There was some support which it broke down. Just move that along, and yeah, look, this is acting as a bit of a support zone as well, around that 13.5 cent mark. Like, as an example, here's another silver stock. So this is a motion trader stock. I've got some of this one myself. So look at how it's been performing over the last, we'll say since May. Let's say since May. Look how this one's been performing, and now look at how SBL has been performing over the same time. It hasn't got that same dynamic movement to it. It is making its way higher, but it's like St Barbara Mines. Hasn't been one of the stronger players in the sector. That's not to say that can't change and this can't gain momentum. I think it's worth considering exposure to it, because it is in a sector which is where the underlying product is moving, that being silver. It does have the characteristics of an upward trend, rising lows, rising highs, above rising moving averages, but just keeping in mind that it hasn't been one of the stronger players. It's like, I've seen this many times before, where you, particularly in gold, where the gold price runs, but you back the wrong gold stock, and it can be a disappointing experience. So yeah, some exposure, but I wouldn't make it my only silver exposure. If I was getting in at current levels, like, it could be bought at current levels, and it probably needs a 25% stop, or maybe the better play would be buying a break above today's high. So it's made a high today and it's pulled back. It's on its lows now. So what if it just continues to pull back over the next few weeks? So maybe it's a case of just wait for the momentum to reignite, buy a break above the current high. So you're kind of going with at least near-term momentum, and then see whether that can accelerate from there. So yeah, look, it's in an area which is working at the moment, being silver. Just whether this one's going to play out like USL so far has been playing out. Time will tell.
Okay, Keith, hello. His thoughts on Newmont gold ETFs rebalancing holdings.
Yeah, Newmont has been the big North American stocks generally have been strong performers over the last 6 weeks. Barrick being another one, and they're two of the biggest positions in the GDX Gold Miners ETF. Newmont being number 1, Barrick being number 3, Agincourt Eagle being number 2, and that is AEM. That's so they're the big 3 in GDX, and this is why GDX. This is a gold miners ETF. And that's why the gold miners ETF looks like it does. It's at all-time highs. It recently broke last week. It broke above its previous all-time high from back in 2011. So that's an extraordinary move. I don't think there's ever been quite a move like that in GDX. It's I wonder, like, in terms of like institutional, big institutional buying, I would have thought those big 3, Newmont, Barrick, Agincourt, they'd be the 3 big plays if for institutional exposure. I wonder whether there's some sort of like the big move in gold has been central bank buying, I think, over the last few years. Are we seeing more of an institutional shift towards gold mining stocks? Is that why we're seeing this big run in the big 3? I'm just speculating on reasons behind it, but there's a clear strong move going on in Newmont, Barrick, and Agincourt in the last 6 weeks. You can see that trend. I don't own any Newmont or Barrick, but I own GDX. So by default, I'm in Newmont. I'm happy holding my GDX position. I've had it for a long time. It's more of a core holding than a trading position. Look, I talk about this in the weekly strategy sessions. I think, this is a trend I want to be on. It's come a long way. It can always pause and consolidate, but in the months and the year ahead, I think Newmont's heading for new highs above the April 22 level.
Okay. Fantastic. All right, let's go on to Torfix. LTP, please. Yeah, is it LT? Yeah, that's one. LTP, but LTR Pharma. Yep.
LTP. It's yeah, it's got the makings of something here. Like it's been through a multi-month basing period. Looks like it's a bit of a rounding base, so the lower lows give way to rising lows. Had that sharp move back above the moving averages, and then you've got this corrective looking pullback towards the moving averages. So it gives the indication the dip's being bought, and then there's a strong counter rally from that pullback. Moving averages just starting to cross. If I was on this, I'd be staying on this and see whether this develops into something. It's just thinking in terms of buying at current levels, like it's hard. It's a hard one to get into because you kind of need 45% of thereabouts of stop loss. So it's a tough one to buy. Like there's no real structural support there. So then you revert to something like Fibonacci's and go, okay, well, there's the Fibonacci zone. So if I bought it at current levels, have a stop below the Fibonacci's and 25%. So I'm below the bottom end of the Fibonacci range, and I'll tack on a margin or round it to 25%. So if I wanted to get in, that would probably be the play. Let me just check something. Yeah, you can see how the Fibonacci's work there. So you'd be big rallying, they've come back to the lower end and like tacking a margin on. That's where you can kind of, maybe that's how you can use Fibonacci's. I don't usually use them in that way, but I'm just trying to be think how could we operate in a trend like this where it requires such a big stop loss. Alternatively, just watch, see if it can hold on to these recent gains, go sideways while the moving averages turn higher. That could provide a buying platform, or then a subsequent break higher from that. So multiple ways of playing this. But if in, I'd be staying in, and my stop loss would be say we bought the dip, back in September. I'd be risking giving all that back with a small loss and having my stop below the 100-day moving average. That's why I'd be approaching this one.
Okay, fantastic. Maurice, g'day. Let's have a look at PNV for him.
What was that?
N Finale, and V for Vase.
Yeah, this is interesting price action too. I like I like that we've gone from below to above the averages. I like the consolidation. It's got that zigzag to it. The down, the up, down, and then it's rallied again from just above the moving averages. Moving averages are close to crossing. Could there be some more consolidation? It could continue to pause and then break higher, or it could go in the near term. We never know which one. I think this could be considered at current levels with maybe a 20% stop. It's not a motion trader signal at the moment. Motion trader is going to need these moving averages to cross and then a 70-day high. So the buying signal for that is going to be, if it happens, is probably going to be more up around, above this high from the 2nd of September. So probably just below 170 perhaps. But the moving averages need to cross, and that looks like that could happen in the next week or two. So I think we'll probably, there's a good chance we'll see a motion trader signal in the near term if it can hold these gains and break a little bit higher. It's certainly got some turnaround potential. If I was in there already, if I was a bit preemptive and I got in, great, I'd be staying in. Stop would be back down here below the moving averages. If I'm not in, I could consider it at current levels, or I could watch it for a little bit, see if it holds these gains, consolidates, and then breaks higher with the moving averages turning. So a few ways to play it. Asymmetric in that I think the The risk is relatively contained around that 20% mark. And upside, well, upside is always uncapped. That's what we want, uncapped upside with relatively small risk. Doesn't mean it's always going to deliver for us, but we can set up around that overall criteria of relatively small risk, uncapped upside. We only need a 40 or 50% of your stocks to move higher, and maybe only 10 or 20% of them to move a lot higher, and you can do really well. Minimizing that risk, uncapping that upside.
Okay, Haas. Let's have a look at SOFI. Haas.
Was it SOFI?
Yeah.
Yeah. Big, strong uptrend. I'd be staying on board, letting profits run, rise moving averages, above the moving averages. It's always a hard time to buy a stock which has been doing this. It's one of the things I struggle a bit with. It's the back testing tells me you buy it 12-month highs, and I know you buy 12-month highs. Odds favour more all-time highs, but this one has been running for a while and it is stretched. I prefer buying after some sort of a consolidation and then a breakout. But look, I'd be more than happy to let this one run. As for buying it, also buying it near previous highs, that can always cause consolidation. I'd probably more inclined just to let it run rather than be doing a whole lot of buying at the moment. But trend is very much in place. Rod, you there? Looks like we might have lost Rog. So let me see whether I can find the Q&A. So let's see, where are we? So we're up to James and OBM. So let's go over and let me see if we can find OBM, and hopefully Rods will join back in. So OBM. So I had this a little while back and I sold it as prices, that was a big pullback. It was like how big a pullback was that? It was 50%. It was too big. It triggered my trailing stop and I sold it. And I hesitated to sell because I thought this could happen, but ultimately I had to manage risk. So I cut the position. Now it's run again. And well, if I was still holding, I'd be happy holding it now because now back above the moving averages. Just looking at this, it's like, so the moving averages are turning back higher. If I was holding this now, I'd be happy staying. It's a gold stock which is above moving averages, so that's promising. Is it a buy at current levels? It could be. So like at current levels, you think, look, if it was bought at current levels, maybe on a 20% stop, maybe this could be a way into a gold stock buying the pullback towards the moving averages. So look, I think it's a stock I'd hold. It's a stock I could consider buying if I wanted to get some gold exposure. Let's see, is Rog back?
Oh, you're back, Rog. I'm dropping in and out.
That's okay. No, I jumped over to the notes, and so we just did OBM for James.
Let's have a look at SRL. And SRL for Steve is the next one. Steve.
Oh, which one?
SRL.
SRL. Okay. Yeah. Big upside acceleration. Not one I'd be buying. It's way too far above the moving averages to consider buying it, but I'd be very much letting it run if I was on it. Moving averages are rising. It's stretched. It could pull back, like I would have told you that in July. It stretched, could pull back. It did pull back. That's why you need to have the wide trailing stop to see off the pullback. And then, if you did that, like, great, look at this. You open yourself to the potential of getting a stock that does this, but you've got to be able to see off, the pullbacks. So many people would have got this initial move and then been taken out during the pullback to the moving average. Wide trailing stops. I go on about it all the time because I think it's a key part of big trends. I'd be letting this one run. Depending on where I got in from, this could have been a stock which could have been bought back at like 64 cents, going on the moving averages and breakouts and stuff. It's now up around $4 something. So from that perspective, with a multi 100% gain, I'd probably think of a little bit of reweighting, as we've spoken about before. But I'd be keeping my core position and letting it go.
Okay, fantastic. Hassan, let's have a look at DUR. I dread seeing DUR and TUA, to be honest, Jace, because they're one of the ones that stopped me out and are now at once again trading at all-time highs.
Oh, look, it doesn't matter, Rod. Just like I had DUR during this big upward trending phase, and I got stopped out in the pullback during early 24. But then I've moved on. I'm in other stocks now, and it's like the merry-go-round continues, and you're just jumping onto another horse on that merry-go-round. And when they run, that's great. You let them keep running, and then the ones that aren't going to run, well, that's okay. We jump off them and jump onto something else. It's like, it's it'd be nice when we look back at some of the ones we've gotten out of. We go, oh, if I'd just given them a smidgen more. But you can only do that in hindsight. In real time, you've got to have your levels, and that's the best we can do. Looking at it now, it's new highs. If I was in this one, I'd be staying in it. It re-triggered a motion trader signal at some point. I don't remember how it's all played out. But look, trend here is up. This is one I'd be happy to stay on. So it's broken above. There's a bit of a resistance region through there. Some previous highs, nicely above there. I think from a stop perspective, there'd be a motion traded trailing stop, which is going to be probably back down at least around the 1500-day moving averages. Lots of room to move, and see where this one goes. But the trend here is up. Happy to stay on it.
Okay, fantastic. Let's have a look at silvers. WC8, please.
Maybe it's basing, but it's a little bit too early for me. It's like a little bit like Vulcan Energy in a sense. I think we looked at earlier. Moving averages are close to crossing, so it's rallied off its lows. It's trading sideways along pretty much flat moving averages. For me, maybe a breakout above the 9th of September high. So maybe buying it around 22 cents if it were to do that, say buying at 22 cents and then having maybe a 25% stop on it. That would probably be the way I'd approach it at the moment. Buying at current levels, I think there's too much risk that it just continues to chop sideways, or even nothing to say can't continue to ebb lower again. So I'd be inclined to watch it for now. Maybe have a buy stop at 22 cents and buy like another surge in momentum, and then see whether that can then lead to more of a building of a trend. At the moment, we're looking. Is there a base? We don't really have an emerging trend. You need a breakout to start to get an emerging trend. I think it's an interesting setup. People who like to buy down and out stocks. That's all great, but I think the time to buy them is when they're down and out and they start to reverse higher. Buying down and out when it's continuing to move lower, it's just it can be a long and frustrating process. Buying into momentum, I think, starts to shift the odds into your favour of getting a good result, and also trying to get that timing so you get there and you're not sitting for months on end as things go sideways.
Okay, fantastic. We're going to finish off with Headley. DTR, please. So Headley.
Big uptrend. And yeah, look, I'd be happy staying on the trend. Rising moving averages, well above the moving averages. Probably not too keen to chase it up here. And also looking at today's action, it's opened on its highs, it's now trading lower. Maybe that's the start of some consolidation, but yeah, I certainly wouldn't be using that as a sign for selling or anything. But I'd probably hold off buying at this point because it is elevated above those averages. But wide trailing stop. Again, you can see strong move, pull back towards the averages. Didn't get to the averages, but it was still you still needed a wide stop to see that off, and that could continue. We could see a decent type of pullback. I'm not saying that's what we're going to see, but we could see that decent type of pullback towards the 50-day moving average. Some stability comes in, and then towards the end of the year, next year, maybe we get another rally. All sorts of ways of price action can play out, but that's why we have that wide trailing stop to be prepared for that type of possibility. But yeah, it's a trend I'd be happy to sit with. Maybe skim a bit off the top if I was in from really low levels. But if I was only like up 100%, I'd be just running my position, see where it goes.
Okay, fantastic. All right, we will pause for now at this one. Neil, Lloyd, and Simon, I know some of you guys have been here for a while. So just to recap, obviously, we're going to try and stick this show to about an hour just to save Jason's voice and brain a little bit as well, right? We're going to go through one ticker each at this point. Make sure we get through as many as we can, make it as fair as possible going forward with this show, just to make it sustainable as well, right? So thanks once again, everyone, for coming. We have a pause next week. We won't be here next week on the show. I'm actually having a week off. So, but you can catch Jason. He'll be online and doing his motion trader thing on a Friday. Isn't that right, Jace?
Yep. I'll be here on Friday with do the live show on Friday for Strategy Session members, and then there's a shorter version that goes out on YouTube on Saturday mornings.
Yeah.
Plenty of technical stuff to talk about.
Fantastic. So go over there and check out motiontrade.com.au if you want to subscribe to that. Don't forget to subscribe and like. I don't know if I've asked that already, but if you haven't, do it out and send us a comment down below as well. We will be back on the 30th of here on a Tuesday at lunchtime. We'll be back at 12 o'clock Australian Eastern Standard Time. Obviously, we'll be back on the 30th of September. Like I said, we did have our 2-year anniversary show, so I'm planning on some sort of gifts for our viewers if you're a Selfwealth member, obviously. So looking forward to seeing everyone again in a week and a bit time. All right. Otherwise, thanks, Jace. Thanks once again.
Hey, thanks, Rog. Thanks, everyone, for coming and joining us. Hopefully it's been interesting, gone through a few things that may be helpful for you. And yeah, look forward to catching up either with my strategy session on Friday or back here in a couple of weeks.
Thank you, everyone, and have a great day and a great week ahead. Take care. Bye-bye.